My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey folks, welcome back. Today, zooming in from beautiful Southern California, we have a very experienced real estate investor turned money guy, Ivan Oberon. And Ivan has done a lot. He comes from kind of a corporate background with insurance. Then he got into real estate investing, got into flips, really cranked that up. He and his partner did over 300 flips. He's also got buying old properties in his portfolio. And he got so good at raising the money for his flips, he eventually transitioned into that as his full-time gig. So he helps people get the money they need to do their real estate deals. So Ivan, welcome to the show. Great to have you.
Hey, thanks so much, Dave. Appreciate it. Yeah,
I appreciate you being on the show. As we're recording this, the fires are ravaging Southern California, and that's where you're zooming in from. So, uh,
yeah. Yeah, I guess
yeah,
it's
heart
something
goes
that the
out.
whole world's gonna take notice of, right?
Yeah, definitely for sure. So, Ivan, why don't you give us a little snapshot of what business looks like for you right now as of the beginning of 2025?
Yeah, sure. I mean, it's we're very grateful and thankful that the end of 2024, the last quarter, we really picked up a lot of good momentum in that quarter. And I don't know exactly what's going to happen because nobody has a crystal ball, but I think a lot of confidence is coming back into the market too now after the election. A lot of people were waiting for election results
Yeah.
before they decide to do anything. Now we still don't know what's going to happen because nobody can control the rates. Nobody can predict what those rates are going to be, but I am seeing a lot more buyers come online. And one of the things that I am grateful for also is my entire background and my foundation was all built off of real estate investor business, right? So as I was transitioning in 2018 after during kind of that crash into more focusing on the private money side, the mortgage side, because I do have a traditional mortgage shop on my platform as well. So I help homeowners also. And even when those things started slowing down because of the rates, the buying, the first time home buyers, all that kind of stuff, the investors are still out there, right? The people
Mhm.
ask me when's the best time to buy real estate. I say like right now, right? It's always the best time to buy real estate. It's just a matter of what your strategy is, how you mitigate your risk, what you want your profit to be, and then later on you can get a different rate if that's something that you choose to do. But we are very busy and thankfully, and it's been everything from your vanilla fix and flip product, which is
Mhm.
we lend nationwide, to hey, we want to build ground up to more complicated things like land deals and land development and multifamily construction and commercial deals and things of that nature. And then of course your vanilla, hey, we're moving, can we qualify for our next home or our first home? And really, we've built something that we can do everything from your $50,000 HELOC all the way up to, your $400 million Hilton development, pretty much anywhere in the U.S. So we're blessed to have created the relationships, and that's really the main thing I think is the connections are really where the value comes, and the experience of being on both sides of the desk, from borrowing, raising capital, lending capital, and seeing thousands of deals helps us get really creative for people.
So, Ivan, you spend a lot of time actively doing real estate deals, and you still do on the side, but you've really transitioned into the lending side of things full time, so to speak. So,
Yes.
what compare and contrast life as an very active flipper versus what you're doing right now? What do you like more? What do you kind of miss? I mean,
Sure.
nothing's ever perfect, but obviously, you really enjoy
No.
what you're doing with the lending side.
Yeah, nothing's perfect, and of course there's stress, and of course there's all kinds of crazy stuff, and like we say, a deal's never done until it's done, right?
Mhm.
Until that money hits escrow, it's not done. So there's all sometimes things fall out at the very end, and there's always a problem solving aspect of it, which is I think something that I do really like, right?
Yeah.
It's stressful and it's like, man, I wish I had the easy ones where, hey, just give me your 800 FICO score with 30 DTI and you got money in the bank and we'll get that done for you, no sweat, right? And
Yeah.
we do get those from time to time, but by and large, that's not the way it works, right? By and large, it's complicated, it's solving solutions, it's standing out in that way. And what I realized is that, yes, I do really like that side of it way more. I realized during that process, and by the way, most of my flips personally I did remotely. So there's a whole nother level of complexity and things like that. My
Yeah.
business partner was more hands-on and involved in many of his deals. But what I realized kind of as I started transitioning, when I had way more money, I had raised way more money than I had my own personal deals to deploy it into, I had a problem of, well, money wants to move. That's the only way money works. So if I don't move it or find a way to move it, it's going to find somebody else to move it. So that's how I kind of transitioned into the private money brokering side of things, because I had a lot of colleagues that had deals, but weren't able to structure the capital for it like I was. So then I started kind of putting deals together with my investors and so forth. And I
Yeah.
realized that I was a lot better at that than babysitting contractors. I realized that I enjoyed that a lot more than babysitting contractors. So that's why I slowly transitioned into it, and just what the market did. And a lot of guys, even some of the number one guy in the country at the time, flipping homes, got out of the active flipping game right there around 2018, 19 during that crash. And a lot of people were sidelined or lost everything, BK'd. By the grace of God, I was already kind of transitioning slowly into the money side of things, and
Mhm.
that was able to carry me through. And then I just went all in.
Nice, nice. So when early days when you're busy hands-on raising capital for your own deals, sounds like you got very, very good at that. Would that be fair to say, Evan?
Yeah, I mean, I would say so, just because I came at it with an attitude of, look, if I'm going to transition out of this insurance career and really become a full-blown entrepreneur, because I didn't consider myself an entrepreneur when I was in the insurance business. I was working for somebody, I was independent, but man, I tell you, I still had that employee mindset, Dave, where I prided myself in being able to leave work at work, right?
Yeah, yeah.
Now I pride myself in being able to take my work anywhere I go. So it's a,
Well,
it's a
what were some of the things that you found most effective? Because a lot of our listeners and viewers are looking to raise some of their own capital. What did you find most effective early days for raising private capital for your own deals?
Yeah, well, all I can tell you is what worked for me and how I did it,
Yeah,
right? I just, for anybody that's new, especially because back then there wasn't Facebook groups, there wasn't like all the social media and YouTube channels. I didn't know the first thing about real estate. And so I realized that, look, if I'm going to be able to do this, and become an entrepreneur, I'm going to have to figure out how to add value to people. And I had to pick, okay, what people is that? And then I decided, well, it's going to be private money investors who are either dissatisfied with their current returns or don't like the unsecure nature of the stock market. And how do I add value? Well, I have to make myself more valuable first. I didn't know anything. So I focused on education. I focused on getting taught how the whole thing was supposed to work from soup to nuts, and being able to have an intelligent enough and confident enough conversation with a prospective investor so that I could walk them through all the different things, right? How to analyze a deal? How do we protect their money? What their profit split's going to be? What other little things that we put in place to protect them, and all those little things. If you don't even know how to analyze a deal and what a deal is, then you really don't have any business talking to a potential investor.
no, fair enough. But how did
Right.
you get those conversations started? Because that's what a lot of people have challenges
Yeah.
with. They know
Uh,
their stuff, they got experience, they've self-financed a bunch of deals.
okay.
Now they want to start bringing on investors. What do you recommend there first?
Yeah, again, being, and those people are way ahead of where I was, Dave, but all I knew was, who do I talk to, right? Now I know what it's supposed to work like. I've got mentored. I started listening to other people's conversations about their deals. So now I call it relationship leverage, right? Now I can tell stories of other people that were my quote unquote partners, or my mentor did this and that. And I could tell stories because people like examples. And so I really developed that particular relationship and story equity to be able to share it with people. And then, like you said, where do I find the money? Well, it's like every other sales game, right? Look into your network. So I didn't want to talk to family and friends necessarily, but I started calling on previous clients of mine, clients that I
From your insurance days.
from the insurance days, right?
Got it.
So like, hey, I had a client that owned some rental properties that I insured for him. I was like, well, you know what? This guy probably likes real estate, understands it. I'm gonna try to, I'll put him on my list of people to call. And I
Mhm.
started calling on some of those people, asking for face-to-face meetings and letting them know, hey, look, I'm transitioning into something, and I'd really love to have a conversation with you about it and see if they'd give me a little bit of time. And some of them did. And I basically, what a lot of people are taught, probably at every single one of the seminars, and where I learned is no longer in business, and so many things have gone since 2010 through 12. But the idea for me was I wanted to be the money guy first, not find the deal first, because so many people are
Yeah.
taught find the deal and money will come. But
I,
if you,
I, wi- I wish I could figure out whoever started that and give them
yeah,
a gentle little smack upside the head because
seriously.
that's
Now
horrendous.
today, yeah, if a deal comes my way, I'll find the money like that.
Well,
Why?
now, yeah,
Because
you're
I'm
set because you already did the heavy lifting ahead
Yeah,
of time.
I'm well resourced. I know everybody, all that kind of stuff. Then I didn't know anybody,
Yeah.
right? So I started getting soft verbal commitments. And I would put on a deal, and literally I put together my first PowerPoint presentation. I would look up uh, addresses on Google, and I would just create these mock scenarios, basically
Oh,
fake
yeah.
scenarios. I
Yeah.
take a picture of the property, and I'd put the numbers. If we buy it for this and rehab it for that, it'll be worth this much. This is how much we can sell it for. These are the costs, etc. This is what's left at the end. Blah blah blah. This is how we protect your money. Here's all these things. If I can find us a deal like this, would you be interested in investing with me?
Nice.
And
Nice.
then people started saying yes. And I say, okay, well, how much? And then
Mhm.
I would put tentative, like, okay, these people have verbal commitments. And then once I had that, once I had at least 500 grand, which took me
In
about 3 months
verbal commitments in
in
these
verbal
soft.
commitments, man, I started putting in offers like crazy.
Nice.
And it was a little challenging because if you remember what happened around 2012, we had this glut of REOs down here. And in Ventura County, and the hedge funds were coming in and just buying up all the REOs. So here I am putting in offers with 20, 30% margins, and the hedge funds are coming in putting offers with a 3% margin because they're cool
Mhm.
to buy and hold for until they want
Ever.
to.
Yeah.
So I couldn't get any offers here. So that's the other maybe tip that I'll give the audience because I saw so many people come to me from the same seminars that I'd gone to, and I can't get a deal, can't get a deal. I've invested all this money, I can't get a deal. Well, why not? Well, it's because they couldn't get a deal in their own market, or they couldn't get a deal that penciled at 65%. And what I had to do was I'm not going to let that stop me. And so the first four flips I did were 3 hours away from where I live,
Okay.
and I
Yeah,
had
you
to
went to where it made sense.
I
Right.
had to
Right.
create a team. I had to, yeah, because I couldn't get any under contract. I had the money, but I was introduced to a lady that had three properties under contract and was trying to figure out the money. And,
Okay.
so we started talking. I developed a rapport, and I asked her to send me her stuff. And I said, how about we cut out the hard money? I bring in all the money, you manage the project, and we split the profits at the end. And I knew because I penciled it out, of course, I knew it was going to be a win-win and also a win for the investor. So she said
So
yes. And
you're giving the investors a flat rate, and then you guys were splitting profits above that. Is
no, in our particular case, I wanted to do it as risk-free to me as possible.
yeah, yeah.
And the only way that I figured to do that is I penciled my numbers to where the capital that I was bringing into each deal covered 100% of the purchase, 100% of the closing costs, and 100% of the holding costs for 12 months. And
Okay.
so every time we closed an escrow, we had no money out of pocket, but for the investors trusting us and taking that risk, we gave them 50% of the profit.
Yeah. So it's a smart.
Mhm.
So basically, you're doing a 50-50 split. You and your partner split 25% each, and the investor got 50%, give or take.
That's right. That's
Yeah.
right. And that
Smart.
worked out well for us. And that's the other key, right? You can't like just
Don't be
see
greedy.
dollar signs,
Yeah. Yeah.
especially when you get started. Don't be greedy. Like be
Yeah.
happy with what it is, because part of that is you're paying for building your reputation, your track record, and your relationships. It's a
Yeah.
small price to pay for that because then guess what happened? Well, then that investor referred me to another guy, and that guy managed the entire retirement fund for a hospital. And he had some money to invest. And then that guy referred me to somebody else. And, so that you have to take those little lumps at first and consider them a win, man. And they
Yeah.
really were.
No, that's really, really smart, Ivan. No, I love what you're doing there. Question for you. So when you're getting those soft commitments, was there much of a flake factor there? Because I've found over the years there's a bit of a difference between a verbal commitment and a written commitment and that sort of thing.
Right.
What did you find with that?
That's a great question. And thankfully, I established very good rapport. And the first 2 to 3 people were people that I had relationships with as
Yeah.
clients for many years. And of course, once I was already kind of like in the trenches. So once I did that, I just went after it. And I think I got introduced to Susan probably within a month of that, and we were closing our deal.
Yeah.
So I really, out of the people that gave me the initial soft commitments, I had no play factor. I brought a deal
Nice.
and they were ready because they also weren't actively looking, right? They were interested, but they weren't active real estate investors looking to
Yeah,
place
of course.
capital.
Yeah, yeah.
Like, there was no Pace Morby organization at the time where they teach people how to gator and put money. There wasn't any of that. It was just like, oh yeah, we created a little book because you know what happened then too is the stock market. We created a little ebook called the Stock Market Refugee, and it was basically geared towards trying to have conversations with those people who aren't active investors. They like to invest money and they have their money invested in places, but they're not out there looking for deals, right? So it's not like if I went 2 weeks, oh sorry, I already found another deal with these types of people. And
Right.
so really that's why I didn't really have a flake factor because we moved pretty quickly and these people weren't actively looking for places to deploy their
No, I was
capital.
just wondering if some of them got cold feet, but it sounds like they didn't.
Yeah,
So that's
no,
good.
no, none of them got cold feet. The deal, I mean, in those days, the deals were pretty good.
Yeah. 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 But again, when you're just first getting started, you got no proof of concept, you got no
Right.
track record. You just, but
Yeah.
that is awesome.
And,
So
and
Ivan, fast forward to today, it's been a number of years now.
yeah,
Are
12
you
years.
still actively raising capital, or is that something that's taken care of because of who you're associated with and the companies that you work with
Sure.
in the mortgage space?
No, I'm not quote unquote actively raising capital anymore because
Mhm.
I have my institutional sources of private capital, and then of course I
Yeah.
have all the banks out there because I am an independent broker. So I have all the lenders out there for conventional, and I have a couple hundred different hard money lenders. So then they have an unlimited supply of funds.
Yeah.
So in that sense, I'm not raising capital. I only raise capital or put opportunities out there to individual private investors to work with us directly, personally, to build our rental portfolio. Because
I see.
we still like that model where we bring in an investor, we give them a simple rate of return, and then we go buy properties. They get their return, and within 3 years or so, they have all their principal back.
Very cool.
So we're doing it that way in smaller chunks because
Mhm.
the properties that we're buying are typically definitely under 100 grand, anywhere between 30 to 60,000. So it doesn't require a lot of.
Not in California anymore.
Not in California. No, no, California's still good for flipping, but has never really been good for cash flow.
No, definitely not. As we're wrapping up the conversation, Ivan, um, quick question for you because you work with a lot of flippers and real estate investors and people doing
Mhm.
different things professionally with real estate. What would be a couple of quick tips you could give somebody who's looking to get financing to
Mhm.
make it easier on themselves and the mortgage professional they're going to be working with?
Sure. Now, are we talking about somebody who is like brand new to the business with no experience, or somebody that's
You know
already
what?
active?
Let's say somebody with no experience. That would be most of our listeners do have experience, but that'll give them a good
Okay.
refresher too.
Uh, when looking for capital, I go back to kind of how I started the conversation. When somebody comes to me, for example, as the capital source, the first thing I want to know is like, do you know what a deal is? Right? Like,
Yeah.
do you have like what's your team? Do you have these pieces in place already? What's your liquidity? What's your credit score? And believe it or not, credit scores do matter even in the hard money world. What's your liquidity? What's your experience? And we can definitely lend to first timers. Okay, for fix and flip rental properties all day long. Just don't come to me with, or anybody with your first time and you want to build a luxury spec home or want to build an apartment. There's
Yeah.
ways to do that also, and that's called getting a partner, either a
Mhm.
capital partner, a credit partner, or an experienced partner to show, okay, well, I'm coming in with this person. And so I guess the best thing I can say as far as a tip is just be resourceful. When you're first starting out, be resourceful. Don't think that you have to be the one that brings everything to the table. If you happen to not be the one that can bring everything to the table, be resourceful, reach out, and let's have a conversation and put a game plan in place for you.
Speaking of reaching out, if people want to connect with you, where should they go?
The best place I can find me is probably yourkingdomlender.com. That'll redirect you to all my personal stuff. You can DM me, reach out to me. My phone number will be accessible there, and I'm happy to discuss anything you need for first time as an investor, first time home buyer, or anything in between.
Awesome. Thanks, Ivan. Great to have you on the show.
Thank you, Dave. Take care. Happy New Year.
All right, everybody, take care, and we will see you on the next one. Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com. Now at moneypartnerformula.com, we help real estate investors to create a process for predictably getting capital so they can do more deals without relying on hard money lenders or the banks. We do this by building them a private capital marketing system. Now, if you want help turning yourself into a big money capital attraction machine, then book a call with our team to see how we can help. Just visit moneypartnerformula.com to find out more. All right, take care, and we'll see you on the next interview.